Welcome to the closing bell on the 19th of Feb. Today I'm going to have a good look at gold because finally it's broken out. It's really been stuck in a range for a long time. And I have said to you before, after a market's been stuck in a range for a very long time, when it does break out, it can be quite explosive. So I want to go into detail on what's happening in gold so you can understand that, because I think the gold stocks are looking like good value. They haven't really taken off yet, and they've all been beaten up pretty badly. So if gold does race higher, I think there's a good bounce that we could see in those gold stocks. But the rest of the market is looking pretty dodgy. The US market quite weak, and I just want to quickly show you that setup, which I've been showing you for quite a while now. And yeah, I think the story of the week really is gold, which I think is looking pretty interesting. So let's jump to the charts. This, just a quick look at the S&P 500. The main things to point out, this is a weekly chart. We've got those trends that I look at, the 10-week exponential and the 20-week simple. We've had 20 months of a big rally. That trend has just shifted. So that's when I get a little bit wary. Of course, it could be a false signal, but usually the way these things go, if it is going to be correct, is that you get a retest of those long-term moving averages. And if prices turn back down from there, that can be the beginning of quite a big leg. So that's why where we are right now, if I just go in nice and close for you on that chart on the weekly, is that with that trend turning down, prices rallying back to retest that 20-week moving average, and we're seeing the sell-off, that's when I'm starting to get wary. But we did get the weekly buy pivot a couple of weeks ago. So that means, you know, things are shaping up where it could end up being a bit of a range for a while. And this is why, if last night we had another weak night in the US and prices closed on the week below the low of that highest price candle in this move, it'll just create another weekly sell pivot. So that will just say, you know, watch out. So if, I don't know, you know more than me because you are watching this on Saturday, but if prices do sell off again tonight and we get a confirmation of that weekly sell pivot within this weekly downtrend, it's just starting to look a little bit sketchy because it's actually heading below the 200-day moving average as well. And it will be once prices head below that low around 4,200. It's just a setup that could see prices really cascade down. So I'm just a little wary of that at the moment, even though it's a pretty low risk possibility. It is something that now we have that setup, and it's been 20 months since we've seen this weekly trend actually turning down. So you've just got to be a little bit wary out there, especially with the Fed so close to possibly raising rates 50 basis points to start chasing down inflation. But gold is the story of the day for us. So let's start with a long-term look just to understand where things are at. From 2019 to 2020, we had a lovely strong uptrend. We've had a correction since then, and really the market has been stuck. And I want to go into detail about this correction that we've seen. But the first thing to note is the correction really hasn't been that far compared to this huge rally. So from that point of view, gold has held up pretty well over the last couple of years, despite the fact it's been going nowhere. The next thing to look at is the actual structure of this correction. And this is a thing that I have shown you in the past. We're going to go into detail here and look at this correction based on those ranges that I show you. We've got this whole correction here. I make all the calculations based on that. The midpoint of that range coming in around 1880. So that's the point of control of the whole trading that we've seen over the last couple of years in this correction. Now, prices have been stuck in the bottom section of this range, haven't they? We are seeing the buying pressure where I want to see it, in that buy zone, which is right down the bottom of the range. That's well, a 12.5 to 25% of that range. And you've got the sell zone in that 75 to 87% retracement of the range. So that's the calculations for those ranges, and then the midpoint. And prices oscillate between those levels. That's where you can find opportunities. And we've seen, you know, lots of buying pressure through here in the buy zone, but a wall of selling around that point of control, and prices again selling off to the buy zone. So this is the first time we've actually busted up through that point of control for quite a while. So that's a good sign. As long as prices hold above 1880, let's say on this weekly close today, and we could be on the edge of a nice move to the upside, which really would have targets up to that sell zone. And that's really what I want to see. So that's a move up to around 1975 to 2025. I think that could really be on the cards now. But I do want to just give you an even more detailed look at what's going on, just for you to understand things. If I get rid of that range and we analyze the correction in more detail, you'll see that there's been this series of waves which defines that downtrend, as you can see. And when that downtrend will really be under threat is when the lowest high in that downtrend is breached, right? So that's actually up around 1960. So once the gold price heads above 1960, my confidence levels will go way up, that correction is nearly over and that the buying pressure is going to be taking over again, but we're not quite there yet. And from that point of view, if I just analyze that most recent down wave in that downtrend from the all-time high, I can actually look at that wave there and analyze the price action we've seen to get a deeper appreciation of what is really going on. So I'm just looking at that most recent wave down. That's the most important one. Again, we're looking at those buy and sell zones. And what do we see? We see exactly where prices have been changing direction, don't we? So the midpoint of that wave coming in around 1818, and we're seeing, you've seen the rally up into that sell zone, back to the point of control, selling off down to the buy zone, back to the point of control. So we're really starting to understand what's going on here, with prices constantly heading into the sell zone and the buy zone, and then back to the point of control. So that may not be over yet. So prices really are still up in that sell zone of that particular wave. So we may still be in that range. So I'm just well aware of that, and I want you to be aware of that too. So it's positive that prices have broken out in the way they have. But when looking at price action in this way, really we need prices above that 1960 level before I can get really bullish. But the breakout is significant. I'd like to see follow through, and look, maybe we get a bit of a mean reversion, back to the 10-week moving average perhaps. Then the buying pressure comes in again. It can move in weird and wonderful ways, but just wanted to make the point that gold breaking out is quite significant and could lead to much higher prices in gold, especially with the situation out there. And one of my colleagues, Brian, is really a professional looking at the gold stocks, understands what he's talking about. I often call him up to learn a bit about what he's looking at, the gold stocks he likes, just to inform my own trading. So he's definitely worth listening to. So I'll pass you over to him to have a bit of a chat about what he's up to and what he's seeing out there in the gold stocks. So I'll chat with you next week, and I'll pass you over to Brian.
I'm here to talk to you about what's going on with the gold market. The interesting thing about gold is there seems to be some action happening for a change. As you're aware, last year gold had a rather lackluster year, and gold investments, gold stocks, whether they're producers or speculative explorers, they fell during the year. It was a frustrating time for many of us, especially because we saw 3 false rallies. We were excited only to be disappointed. 2022 started off much the same. We had a false rally last month, but things are really turning around, aren't they? As we speak, gold is trading over $1,900 an ounce in US dollar terms. And the reason behind it Now, there are two stories that are going on that may be propping the price of gold up. The first is that economic inflation around the world is actually way above the experts' predictions. And the Federal Reserve and other central banks are scrambling to catch up to control inflation. The Bank of England has raised interest rates twice, once in December and also earlier this month. While the Federal Reserve hasn't acted yet, they are now talking very much about either raising rates in their meeting middle of next month, or it is entirely possible that they may hold an emergency meeting and raise rates then. All this you would expect to be the reason for driving the price of gold up. Except this is not what the media narrative is. The media narrative at the moment is talking about the rising tensions, as they say, between Russia and Ukraine, which will lead to a war. Now, they say it will lead to a war, but let's have a look at how the two participating nations are behaving right now. Normally, you would expect the more powerful nation to be saying to the world, war? What war? I see no war. We're not attacking, but we got troops in the border. And the weaker nation will be going, we need help because the enemy is encroaching on our borders. We feel threatened. This time round, the leaders of both nations are saying the same thing. We're not fighting. There is no war coming. And in fact, they've gone so far into laughing at the US administration, NATO, and the media and asking them, hey, could you send us a list of all your predictions of when the war is going to occur? Just in case they miss the schedule, of course. So my guess is there will actually continue to be escalating fears and uncertainty as the media narrative continues to remain and market investors will trade accordingly. So there is a chance for gold investments, whether it's stocks or bullion, to continue to rise. It might be a chance for us to take a quick buck in this turnaround. When the tensions de-escalate and the media says, yes, we think we were wrong, there isn't a war, we could actually see it come back, and the economic backdrop, that's going to come back into the narrative soon enough. Because clearly, inflation is not going away. The Federal Reserve is likely to act on raising interest rates in a more aggressive manner than they have made themselves out to. And with a rate rise that could come, we could expect the stock markets to largely start retreating, and a flight to safety, will actually occur. This will work in gold's advantage, and especially to gold stocks. Now, what should you do right now? How can I help? Why not consider joining up onto one of my services, Rock Stock Insider or Gold Stock Pro? I'll be able to provide you with instructions on how to trade what will happen with gold in the coming months and years. And hopefully we'll be able to make some handsome rewards. There is a lot happening going forward. And I can tell you, there will be further fear and uncertainty and a flight to safety. Gold and gold stocks are the place to be. I'm Brian Chu, editor of Fat Tail Investment Media.